Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. In a dramatic shift on April 9th, U.S. President Donald Trump announced a 90-day suspension of mutual tariffs for all countries except China, a reversal from his previous hardline stance. The move immediately rippled across global financial markets, with the Korean won gaining strength and domestic equities rallying on renewed investor optimism. Yet questions remain: is this a temporary political maneuver or the start of a recalibration in U.S. trade strategy? With uncertainty still looming over core Korean exports like semiconductors and smartphones and major economic players heading to Washington for key negotiations, South Korea now finds itself at a critical economic and diplomatic juncture. To expand more on this, we invite Song Soo-young, Professor of Business and Economics at Chungang University. Welcome, Professor Song.
Yeah, good evening to you. Thank you for having me.
And also joining us is Professor Hwa-kyun Kim of Texas A&M University. Great to have you again, Professor Kim.
Thank you for the invite.
All right. So let's begin our discussion with Professor Kim. On April 9th, like I've said, President Trump announced a 90-day suspension on mutual tariffs for all countries excluding China. And this is a reversal from his earlier stance. Could you tell us, what do you think has led to this change?
So a few factors, especially the financial market factor, probably influenced the President Trump's decision, as he also mentioned in his talk. So the stock market experienced significant turmoil following the initial announcement of widespread tariffs, and S&P 500, NASDAQ showed like worst performance since 2020. And the trillions of dollars actually were erased. So this type of instability in the financial market prompted President Trump to reconsider his stance. And related, and probably more importantly, the bond market reacted very negative to the tariffs news and also some of the evolution of this. And then the yields on the two-year Treasury notes rising very sharply, and 5 years also followed the suit. So that indicated the investors were selling these bonds massively, because these 2 to 5 year bonds are relatively liquid. So I think unless some investors, major investors are selling, it's not going to move that much. So the modern financial market is very complex. For instance, like hedge funds borrow a lot of money to purchase the stocks and other risky assets using treasuries that they hold as collateral. So that means if the treasury's value starts decreasing, that means the margin call can be triggered. And then to meet these calls, hedge funds and other institutions have to force liquidate assets. So selling these kind of things actually can be even get worse, and then I think that can actually lead to a lot of instability in financial market, and that makes the Trump administration concerned about the value of the dollar and also value of the treasuries, etc. And of course, there are some trading partners' requests, but I think that's relatively minor probably at this point.
Right. So with all of this, let's also touch upon the effects on the exchange rate as well. Professor Song, the Korean won US dollar exchange rate, which once broke through 1481, fell to the 1421 range following the mutual tariff suspension. Instability caused by the US tariff policy still lingers. How would you forecast the exchange rate moving forward?
Yeah, the major force that determines the current level of the Korean currency's value against the US dollar is not a specific one. I mean, it has shown that, as Professor Kim has mentioned, because of some surge of selling, fire sale of the Treasury bond, it increases the yield very much, and it instabilizes. I mean, it has disrupted the stabilization of the long-term financial instruments such as a treasury bond. So it has really, the investors and around the world cast a doubt about the ability to stability of the dollar currency. So that is reflect the recent plunge of the dollar value against Korea, and the dollar index has been reduced very much, and also the euros and all other countries has been shown some appreciation. So to that regards, however, still Korean won is very high above the 1400 won. And I think the, this will be determined. The Bank of Korea should not too much worry about the stability of the Korean won against the US dollar because it's beyond their control. Therefore, it means right now, rather than focusing on the value of Korean currency against the US dollars, we need to focus on some domestic issues because this is totally up to the President Trump's President U.S. To Trump's flip and the flop of his policy change. So this causes really, really big uncertainty about the prospect of the world economy and as well as the international trade. So the best would be just rather than focus, rather than paying attention to the Korean exchange against the US dollar, just leave it alone, leave the Korean exchange value. So just to focus on some economic performance in terms of the GDP growth and the domestic demand.
Right. It would be more effective and helpful in focusing on domestic issues to help recover the economy. Now, alongside the mutual tariff suspension, President Trump hinted at easing tariffs on automobiles and auto parts, leading to a rise in the domestic stock market. Professor Kim, do you think this upward trend in the Korean stock market would continue for the time being? Could you tell us about your outlook?
Well, I think so to some extent. Still, I think there are a lot of uncertainties left, I think, in Korean market. But yeah, I think there's some silver linings, as we mentioned in the previous interviews and other things. So basically here, there were a lot of uncertainties about this tariffs actual implementations, and it was actually just happening, and it was very stern. And that led to a big decline in stock market. And then in Korea also, there were a lot of other issues like political uncertainties and risks, etc. So now I think these kind of things seem to be getting somewhat cleared up. So over time, probably this is going to lead to a better outlook for the stock market in the long run, I think, at least for the next year or something, or this year and the next year. But clearly, this lift of this extension of this tariff suspension, I think is probably going to be good news. And still, the investment sentiment is not going to be fully revised positive. So I would say more optimistically cautious, but we have to look and see. So I think the talk with the Japanese, the government is going to be also important. And also the talk with the Mexico and Canada will be also important because the Korean automakers have plants in these countries as well.
Right. So cautiously optimistic, but as you said, sustainability would depend on both global and domestic signals as well. Now, despite strong downside pressure from the U.S. tariff policy and other economic concerns, South Korea's BOK decided to hold the base rate steady today at 2.75%. What do you think were the factors behind the hold, and when would you expect a rate cut, Professor Song?
Actually, I hope and expected a rate cut in this April. The reason, because in February, the BOK, the chairperson, Lee Chang-yong has announced some rate cut. And also continuous rate cut would be helpful to help the domestic economy to recover or to increase the confidence of the consumer. Because right now, I believe, I think the Korean economic situation right now is on the verge of on the threshold of liquidity trap because of the unexpected and abrupt political turmoil because of the martial law in last December 3rd, and then ongoing some very uncertain and unstable situation that shut down the people's mind for the consumption. So the best way to overcome this is, of course, the political issue should be resolved by politically, but the better way to lead and to ease the people's mind about the economic situation would be to reduce the interest rate. That clearly helps, and it works. Clearly, it is true to Japanese economy for the past decade, when the Abenomics actually helped the Japanese economy to come from out of some trap situation of the lost decades of 30 years. So to that regard, I think the rate cut, unfortunately, there was no rate cut and just stand still right now. But on May, they should decrease the interest rate because some analysts and economists are too much concerned of some spread gap between U.S. interest rate and the Korean interest rate that could actually promote the outflow of the U.S. dollar out of the Korean economy. But it is of little importance at the current situation. The reason is because considering the potential recess in the U.S., actually that drives the dollar's value to depreciate, and then hedge fund or other investors, they move around cash, they move the fund out of the U.S. in other countries. So as long as domestic economy in Korea stabilized and people regain the confidence of the economic growth, I think that is a really good sign for the Korean economy to recover, possibly, but it takes time. That's why we need to see some rate cut on the upcoming several months.
Right, and it would be we're speculating, of course, but it would happen as early as next month.
Yeah.
Now, as part of efforts to pursue trade negotiations regarding President Trump's tariff slapping, South Korea's Deputy Prime Minister Choi Sang-mok is scheduled to meet with Treasury Secretary Vincent during his visit to the U.S. next week. What is the significance of this U.S.-initiated meeting coming ahead of formal tariff talks, Professor Kim?
So I think clearly the political uncertainty is a little, now more or less cleared up or ongoing, but I think still it's getting reduced. So I think probably the U.S. government starts thinking to do the trade talks with South Korea and government. And I think this definitely has some good signs. And at the same time, also, the U.S. government is trying to test the water and see how these things actually will pan out. So the meeting definitely underscores the importance of the economic and financial cooperation between Korea and the United States. So obviously provides some opportunity to reaffirm and strengthen these ties, especially in terms of the trade negotiations. And also it is important in terms of discussing the specific trade issues, at least I think in the first cut, to talk further about what kind of adjustments will be made. And I think it allows both parties to address these matters directly, so including other defense, the expenditure issues and some other projects, that the LNG projects and things like that, then the South Korea can get involved. So overall, I think the initiated meeting by the U.S. is definitely a strategic move, calculating many things to ensure that both countries probably are on the same page, but at the same time, start sort of more strategically thinking about what they can get and also what South Korea actually wants to get. And it's kind of like the collaborative, the strategic movement towards resolving some of the issues. At the end of the day, U.S. already has a lot of issues with China and Europe. So I think relatively speaking, to just declare the victory or whatever, I think the importance of the talk with the Korea and Japan, I think is important actually also to the U.S., the Trump administration side.
Right, so definitely this meeting at this level and at this timing could set the tone for broader negotiations to come. Now, on top of this, Industry Minister An Deok-gun is expected to visit the U.S. next week for full-fledged tariff adjustment negotiations. And the government said it's not reviewing defense cost-sharing talks with the U.S. Professor Song, what negotiation cards is the Korean government likely to use?
Uh, just moments ago, I saw the news from the Reuters, and Trump has declared or announced that clearly the U.S. troop costs will, in tariff talks, will be included in Asian allies. So this is unavoidable, even though the minister Anderson has a plan to separate these security and defense cost sharing issues. So considering that situation, then I think this would be this visit by Anderson would be a really too much burden. Actually, the question says of the full-fledged tariff adjustment, but actually the full name of Minister Anderson is the Trade, Energy, and Industry. He must have deal with three different secretary of U.S. So this must be a very, very burdensome to his capacity and the capability to deal with the issues. But still, it needs to talk about as the Professor Kim mentioned, some LNG issues in Alaska. But I think this is a very long-term project, almost 800 miles from the top north side of the North Slope, where the LNG was developed and excavated, and then natural gas developed, and then it should be converted into liquid, and went through all the pipelines from north of Alaska to reach the south port of Nisiki, whatever the name of the port is. I wonder, it is going to be a really difficult project even. So therefore, I don't think this would be a good idea to address this long-term project for the Korean minister. This is, I think, is a nonsense. But because this is an ongoing process, therefore, the best way to address the issues of the defense cost sharing and some other tariff issues, the best one is rather than negotiating, but just as long as the tariff is imposed and just accept it and set the price up, and then let the U.S. Consumers feel the pain of the increased price. And rather than Korean economy should focus, change the direction of the trade with make efforts to find some alternative place to deal with. Otherwise, this would be a really dragging, and we cannot escape. Therefore, the best strategy, even for the defense cost sharing, is if they feel it is too expensive, we should allow some alternative for U.S. troops to leave South Korea.
Okay, so
very strong.
yeah, it is indeed a very strong opinion, but right, it does have a thought to it. So there definitely would be. We would have to look at the consequences and the reactions, and that could also help move the U.S. government's minds as well. Now, like speaking of the Alaska LNG project that we've kind of touched upon a while ago, I want to go back on this. If South Korea actually decides to join this LNG project, Professor Kim, how much do you think it would boost our negotiation power?
As Professor Song mentioned, it's a difficult project, and that's probably why the U.S. wants South Korea actually to join, because they already have like assessed the validity and then the cost-benefit analysis, and then they think that either their sort of like experience with this type of thing is relatively weak, and also the situation is much tougher than they think. So with their just own the expertise, it's not going to be easy. So clearly. So that means it's very difficult, but that also implies that it could be an opportunity and a leverage point for a negotiation as well. So if South Korea indeed has expertise and also the plans and also the ability to handle these type of the really long and this kind of the difficult, the geography to get this pipelines done and then make things work. So it depends on, therefore, how capable Korea actually is in this regard. That's going to make a difference. Also, clearly, the financial side of the support is going to be very important. So I believe the Korea Gas Corporation is likely to be a lead investor, and they probably can face significant financial challenges. So definitely the debt ratio is going to be skyrocketing if they start doing this, and some of the government support, additional support is going to be necessary. So both the technological side and the financial side help is going to be absolutely necessary. And actually, this should show the enough assurance to the U.S. that, oh, so this is something that can be done. Then I think definitely it can be a big bargaining point. And that's actually why they have this pre-meeting, I think.
Right. Well, though it's a very rocky road ahead, it could be a strong diplomatic tool if we would. Now, a couple of days ago, the U.S.
I'm sorry. Let me interrupt you because I would like to mention a little bit why I believe that Alaskan natural gas project is really difficult in the long-term project and is two-sided. One side is the pipeline should be buried under the ground. This part is really daunting job for the whatever who has the contract to build up the pipeline, because in Europe and Norway, the pipeline is on the ground. So let some caribous and wild animals pass under the pipeline. But in Alaska, U.S. Demands that the pipeline should be buried under the ground, and I guess the reason is because to protect not only the environment but also from some kind of the destruction by the adversaries. So that is one reason. And the second aspect is financially. This project required almost $44 billion. Actually, the Alaska state budget is only $13 billion. So this is the issue far beyond the capacity of Alaska to deal with. So this should be addressed under the federal government. And this must be a really long-term project. And then the problem is how profitable, and then the cash flow is too far away. That's really my concern. So that's why before we taking advantage or enjoy the benefit of the liquefied natural gas, that is a far remote way. So that's why I would like to separate these LNG issues totally out of some other tariff issues or other. So that's what I would like to say.
Right. Professor Song, thank you so much for pointing out for our viewers and elaborating the complexity and density of these Alaska LNG project. It will really be a hard thing to decide by the government, but we'll have to wait and see until the weeks to come. As of now, we will have to wrap up our program for tonight. Thank you so much for your insights and for your time, Professor Song and Professor Kim. We appreciate it.
Thank you.
My pleasure.
And that'll be all from us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Until then, stay informed and engaged.